Welcome to this explainer. Listen, if you've ever found yourself staring down a chaotic, totally unmanageable general ledger, you already know that keeping financial data organized and actually insightful is a massive headache. Well, today we're jumping straight into how Microsoft Dynamics 365 Finance fundamentally transforms that old-school accounting architecture. We're going to look closely at how this cloud-based ERP solution tackles the problem head-on by completely rethinking the way we categorize our management, operations, and reporting.
Okay, so let's kick things off by asking the ultimate question for literally any finance consultant who's ever faced a bloated ledger. Seriously, why on earth would you create hundreds of individual general ledger accounts when you could just use one? Think about how much time is wasted just scrolling through endless, repetitive account lists trying to find that one specific combination of department, region, and expense type. What if there was a completely different way to architect this data? To answer that, let's quickly run through our agenda for today. First, we'll cover the D365 Finance Foundation, then the Chart of Accounts dilemma. After that, we are looking at why use financial dimensions, followed by setting the data guardrails. And finally, we will wrap things up with a real-world consultant solution. All right, diving right in with Section 1, the D365 Finance Foundation. So your very first task as a consultant here is understanding the legal entity. This essentially dictates the fundamental statutory boundaries we're working within. Think of a legal entity as a distinct container, representing a company with its own separate statutory reporting requirements. For example, Margon IE for Ireland or Margon US for the United States. Inside each of these containers, you'll be setting up specific addresses, tax registrations, and fiscal calendars, like a standard January to December accounting year, which controls when transactions can actually be posted and closed out at month end. And as you build out this setup, your configurations and transactions are going to flow through 4 distinct environment types. Because let's be real, you never just build directly in the live system. First, you identify the requirement and start in development. Then you move it up to test or UAT to validate it. Next up is the sandbox, which gives you a true-to-life simulation, and finally, you push to production, your live reporting environment. This whole flow ensures that when users enter transactions, the subledgers generate accurate postings right into the general ledger. Moving right along to Section 2, the Chart of Accounts dilemma. We all know the Chart of Accounts maps out your business activities. But in older, legacy systems, tracking a specific spend meant creating massive, frankly chaotic lists of accounts. By definition, it's just a structured list of all your financial accounts across categories like asset, liability, equity, revenue, and expense. You might have 1,100 for cash, 2,100 for accounts payable, and maybe 5,100 for a general expense. Pretty standard, right? But what happens when management suddenly wants to see that 5,100 expense account broken down by 5 different departments and 10 different regions? It instantly turns into an exhausting manual nightmare to manage. And this is exactly why we need to talk about why you'd use financial dimensions instead. The dynamic contrast here is brilliant. Why build an unmanageable web of separate general ledger accounts when you can just use dynamic tags? The old way literally forced you to create a unique main account for every single possible combination. You'd have one account for marketing expense US, a totally separate one for marketing expense Ireland, and it just multiplied exponentially. The D365 way completely flips the script. You have one single main account and you pair it with financial dimensions. Which brings us nicely to Section 3, the real core of our discussion. Why use financial dimensions? So the magic here is that you apply analytical tags like department or project directly to that single main account. Think of them exactly like social media hashtags, but for your financial data. You keep your one 500-100 expense account, but when a user posts a transaction, they just tag it. They intersect it with a department, a cost center, a region, or maybe a business unit. One single expense account can now be analyzed across multiple departments without creating a single new GL account. The core design philosophy driving all of this is beautifully simple. Streamline your primary structure so you can track profitability without excessive GL accounts. This design principle is an absolute game changer. It enhances your analysis without requiring you to completely redesign the chart of accounts every single time the business enters a new market or spins up a new department. You literally just add a new dimension value, and your reporting adapts instantly. Now let's get into Section 4, setting the data guardrails. Because let's be honest, you can't just let users tag whatever they want, or your data quality will absolutely tank. Once you have these dimensions, you use account structures to force the system to validate transactions against predefined rules. Basically, you're defining the valid combinations of accounts and dimensions. For example, in Step 1, the system checks the main account. If it sees it's an expense account, Step 2 kicks in immediately and says, hold on, you cannot post this unless you provide both a cost center and a department. This guarantees your reporting consistency across the board. But it gets better. You can also layer on advanced rule structures. This applies extra dimension requirements only when they're strictly needed, giving you flexibility while cutting down on user errors. Let's say you have a specific scenario, like a travel expense. Through an advanced rule, the system detects this right away in Step 1. In Step 2, it applies an extra requirement, and by Step 3, it forces the user to input a project dimension. The beauty here is that your everyday, regular expenses don't need a project tag, but travel expenses do. It's incredibly targeted precision. And to keep all of these tagging processes totally secure, D365 uses a strict hierarchy to enforce the segregation of duties. This prevents obvious conflicts, like having a single user create and approve their own payment. The security framework flows perfectly from role to duty to privilege. So an accounts payable clerk is the role, creating an invoice is a duty, and accessing the specific screen to actually type it in, that's the privilege. This ensures that the person tagging expenses is actually authorized to do so, totally locking down your financial architecture. Finally, let's wrap this up with Section 5, a real-world consultant solution. Let's land the plane with a real-world workshop example. Imagine you're given this exact requirement from a management team. Finance wants departmental reporting for budget analysis and profitability. Now, in the olden days, a consultant would let out a huge sigh, open up the legacy system, and manually generate hundreds of new general ledger accounts just to accommodate that one request. But with D365, by simply creating a department dimension instead of duplicating all those accounts, you deliver an incredibly elegant outcome. You just look at the management team and say, we aren't going to touch your main accounts. Instead, you configure the system to add a new department financial tag. The result is a vastly simpler chart of accounts, incredibly rich management views, and flawless data quality. It perfectly satisfies the reporting needs without the bloat. So, I'm going to leave you with this final thought to chew on as you design your next ERP architecture. If financial dimensions alone can magically streamline hundreds of bloated accounts into just a few simple, elegantly tagged main accounts, how else might D365 fundamentally reshape your entire approach to financial reporting and operations? Keep questioning those old ways of doing things, and keep exploring how smart architecture can do the heavy lifting for you. Thanks for joining me on this explainer.